Okay, so guys, we're going to start with gold. Let me look for gold quickly. Okay, there we go. Okay, so now normally when we analyze, we do what we call top-down analysis. So top-down, it's like we're starting with the bigger time frame, and then we go to a smaller time frame, we go to a smaller time frame, we go to a smaller time frame until we find the suitable time frame to execute a trade. But always, when you execute a trade, use a smaller time frame. Always, whenever you execute the trade, use a smaller time frame. So these pairs are different. If you're going to analyze gold, it depends on it also depends on the kind of a trader you are. So normally I day trade, so which means I enter my trades and close my trades same day. So I will not be studying on daily time frame if I'm analyzing, because I know that if you analyze with a daily time frame, your support and resistance or your analysis are for someone who's supposed to wait for that pair to reach the particular position after a week or so. So normally when I'm trading gold, the biggest time frame that I use is H1. It's H1. I start analyzing gold from H1. So I don't necessarily depend on time frames. Sorry, no, I don't necessarily depend on horizontal support and resistance, like normal support and resistance, stuff like this. Stuff like this, to say these are my points. So as you can see that these are positions, right? But that's not my way of trading. That's not how I trade. So for me, I always look for channel and trend line. I always look for channel and trend line. I use channel and trend line to analyze, because channel and trend line, it follows the trend. It follows the trend. We have downtrend, we have a downtrend as well as uptrend, and also sideways. So in this case, if you're going to look at gold, you will notice that this is what we have. So when I draw, the question is, how do you draw the channel? The question is, how do you draw the channel, right? Now, when you draw a channel, you look for two obvious points. Connect the two obvious points, and then you wait for a trend to get to the third point. So looking at gold here, you will notice that we have a sideways market. Since this is what we have sideways market. So this is what we have. This is what we have, guys. We have sideways market for gold. Now, our key points. Number one, it's this one. This is number 1 point. Number 2, we have this one. But then for obvious, we'll say this is our number 2 when we talk about obvious. The one that you don't need to look harder. You don't need to look harder, you just see it. This is your obvious point. So when you trade using channel, you have 1, 2, Then third touch, that's where you enter. The question is, how do you enter? So you're going to wait for the market. So in this case, we have, because it's sideways. So when we trade uptrend, let's say we're trading uptrend. On uptrend, we only look for buy opportunities, and on downtrend, we only look for sell opportunities. So since this one is sideways, so which means we can always take buy as well as sell opportunities. We look for both buy and sell opportunities. Now, the points that we have below, it's 1, 2, 3, all right? 1, 2, 3. Clearly, the person who wants to trade gold is now in a good position to take a trade. But before you take a trade, you need to confirm using certain things to confirm your entry. Normally, I use candlesticks patterns to confirm my entries. So I won't be teach people about candlesticks because this is not a lesson, it's a live chart analysis. So, but according to the movement, if you are going to look at gold, gold was on uptrend from this side. Gold was on uptrend from this side. So using our trend line, we have trend line like this. We have trend line like this. We have trend line like this. So gold was on what? Uptrend. And on uptrend, we only look for buy opportunity. So now the reason I'm mentioning that gold was on uptrend is because I want to tell you that gold is, the chances are that gold is going to change the trend, which means we might see gold going down. For now, it can always go up, but we have the key level here. We have the key level somewhere here. We have the key level around this point. So which means we might see gold, which means we might see gold going from this point, we might see gold going this way, and then from here we might see gold going this way. All right, to come and test this point. So this is not to say gold it's gonna do exactly that, but this is something that we might see gold doing. Do you guys understand what I'm saying? I'm saying this is not to say gold it's gonna come here. Yes, for sure, this is what is expected. We might see something like this. That's if gold managed to change the trend. So why am I saying this is not to say this is exactly what gold is going to do? This is because it can always do something like this, just like here. So as I was saying, that this is like something that we might expect on gold, but this is not to say gold is gonna do exactly that. So at this point, this is not different from this side. If you look at gold from this side, someone with the same analysis, the time gold was where? The time gold was here. That particular person was definitely sure. The time gold from here, let me say from here, the time gold broke this point, that particular person was definitely sure that gold is gonna break this point and then come and test here, and then from here gold is gonna go down. Then what happened? Gold tested, but gold got the momentum to break and went and tested there, which is why I'm saying this is not to say gold it's gonna test and go down. It's 100%, but this is something that we are expecting from gold. So which means it can always test and go down, or it can always break this point, which is why before you take your trade, you need to wait and check your confirmations. After seeing that gold has confirmed your so-called confirmation, because we confirm using different things. Others confirm using indicators, others confirm using candlesticks, patterns, whatever that you use to confirm. You wait for those confirmations when gold gets here. Whenever gold gets to this point, please, whenever gold gets to this point, please wait for your confirmations before you take your trade. All right. So that's what we have for gold. Any other pair? Any other pair, guys? Any other pair, guys?
Can you please check? Can you please check AUDJPY? Sorry.
Sorry.
Can you please check AUDJPY?
Okay, thank you.
Okay, sorry, before you leave this training, can you please answer my question in the chat box?
Okay, not a problem at all. How does one, the question is, okay, how does one determine the key levels? Okay, now, the key levels. Wait, I want to remove this nonsense. I want to remove the nonsense that I just did here. All right, I want to remove this stuff here. Oh, someone. Okay. So the key levels. The key levels are not different from. So I said to people that whenever we draw our, whenever we draw the channel or trend line, we look for obvious points. We look for obvious points. So if you are going to look at the trend from this side, if you are going to look at the trend from this side all the way up there, you will notice that we have something here. We have another thing here. We have another thing here. All right, and the other one is this one. So because we trade differently, other people, they will do something like this. So they will say this is their key level number 1. So this is their key level number 1. This is another key level. And this is another key level. And this is another key level. All right. So basically, we use, normally other people would even say wherever the market has turned, the market is likely to turn again. So the point where the market once turned or tested that point, we consider that point to be a key level. So the reason I'm saying this is another key level, if you look at it, if you look at this point from this side, you will notice that the market tested this point, which is, and even on the inside, the market tested this point here. This was a test. Here, the market was testing, all right? Even here, where is it? The market was testing even here. The market tested again even here. So that's why we consider this point or this line to be a key level, which is why I'm saying from where the market is now, the market is expected to come and test again here. So we might see something like this. We might see the market moving and to come and test this point. We might see the market moving from here to come and test this point. All right. Standile, did I answer your question?
Yes, you did. Thank you.
Okay, thank you. Then I'm moving to, someone said AUDJPY, then I'm moving to AUDJPY, and I think I'm running out of time. And then like, okay, let me just check AUDJPY very fast. AUDJPY.
It's the last one at the bottom there.
Thank you. Okay, so let me just clear the screen. Then I'm going to put my naked chart. There you go. So since AUDJPY is a normal currency, I am going to start my analysis from H4. H4. So here it's more like when you analyze a pair like AUDJPY, it's more like you are trying to find the movement for the whole week. You are trying to check where AUD is likely to go for the whole week. That's why I normally do my analysis on Sunday, so that I know that certain pairs this whole week I might expect to see something like this. All right. Now, again, I start with what channel? Start with a channel, and when I'm drawing my channel, I look for my two obvious points. And another thing, you need to look at the trend. Where is the trend going? So if you look at AUDJPY, you will notice that AUDJPY, it had this point and this point, which makes a trend. All right. So it's more like from this side all the way up there, we had uptrend. But then now we have this point and this point also, and then looks like AUDJPY has violated the trend, or it has changed, or it is changing the trend. Now, sorry. Okay, so this is what I'm going to do. So this is what we have. Okay, this, right? If you look at it, you'll notice that. So here you will do something like this, plugging your two obvious points. Plugging your two obvious points. So from here, down at the bottom here, all the way up, we had uptrend. But then we reached this level. And then now, remember, guys, we all know that the market moves using what is called impulse and corrective movement, right? Now, this is our first impulse on AUDJPY, and this is our correction. Now, this is another impulse. This is another correction, another impulse, correction, correction, impulse, correction, impulse, correction, impulse, another correction, another impulse. Then from here, if you look at this thing very well, you will notice that this GBP JPY, it just did double top here. It's double top. This is, remember, this is H4. When you go to H1, you will realize that this is a clear double top. Now, from here, since AUDJPY, it was unable to cross this line. Remember, when we have a corrective and impulse, we are expecting a pair to always move up. That's why other people are calling them higher high, higher low, higher high, higher low. All right. So this points like this one is your higher high, and this one is a higher low, higher high, higher low, just like that, moving up. And when you move, when we begin to move down, we have lower low and lower high, lower low, lower high, just like that. Now, if you look at AUDJPY here, it was unable to cross this point. It couldn't cross this point again. So someone might say, even here, AUD went down below this point, right? Which is true. But then what happened after that? After that, AUD was able to move further up than these 2 points, all right? So we call points like this one, we call them fake outs, because you'd have thought from here moving down, the trend was about to change, which you were not wrong, but then you were supposed to wait for your confirmations, all right? Now, after it has crossed this point, AUDJPY managed to go up further than those 2 points, and then now it came and then made a double top here. Now it's moving down again, but then we have this point. So if you will notice, you will realize that AUD tested this point here, tested again here. Now it's moving down. And from the trend line that we have, where AUD was moving using the trend line to go up, it did your 1, your 2, and 3. And then you took a buy here. But you knew you took a buy here. Using your confirmations, you took a buy here. You took a buy here using your confirmations. And from here, you ate because the market went up. But you knew very well that this is a key level, which means your take profit was supposed to be below this point, was supposed to be somewhere around this point. All right, because you are expecting AUDJPY to come and test this point. And remember, this is H4, guys, which means the movement from here to here, it's a very, very big movement. Let me check how many pips. Let me check how many pips. How many pips? Okay. Now, how many pips? So we have 73 pips. we have 73 pips. Those are enough pips, guys. Someone always say you must just get 50 pips a day and get out of the market. So the movement from here to here, you got your 73 pips. That's more than enough. That's more than enough because the target is supposed to be 50. That's it. All right. So from here, you will notice that your AUDJPY has tested this point, and then now it's going down. Then from this point, if you will, as you can see that this, it's another key level. All right. This is another key